Limited liability companies, LLCs, are the most flexible business structure for tax purposes. While that versatility can be advantageous, it can also complicate figuring out the right way to take money out of your business. If you're the sole business owner of a limited liability company, here's what you should know on how to pay yourself with a single member LLC. We'll cover each option, when they're appropriate, and the tax implications of the most common approach. Can a single member LLC pay themselves? You can pay yourself from a single member LLC in multiple ways, but there's a required method for each situation. It primarily depends on how you elect to treat your small business for tax purposes. You have 3 options. 1. Default. If you file no additional paperwork, your single member LLC is taxable as a sole proprietorship. That means you must pay yourself exclusively through the owner's draws. 2. S Corporation. If you file Form 2553 with the Internal Revenue Service, IRS, they'll treat your LLC as an S Corp for tax purposes. You must pay yourself a reasonable salary, but you can also take any remaining profits as distributions. 3. C Corporation. If you file Form 8832 with the IRS, they'll treat your LLC as a C Corp for tax purposes. You must pay yourself a salary that equals reasonable compensation if you're involved in the day-to-day operations. However, you can also pay yourself whatever business profit is left over by issuing dividends. Whichever taxation method you choose, you'll always be able to pay yourself from your single member LLC. However, the methods you use to transfer the funds differ, as will their tax consequences at the personal and business levels. This video focuses on paying yourself from a single member LLC the default way. Once again, in that case, you're a sole proprietor for tax purposes and must pay yourself with LLC owner's draws. You can't take a salary, distribution, or dividend. How do I pay myself from my LLC? Assuming your single member LLC receives the default tax treatment from the IRS, you'll need to pay yourself with the owner's draws. That sounds formal, but there's no official way to do this. It just means taking money out of your business to pay yourself. In practice, business owners can complete an owner's draw in any of the following ways. Writing yourself a check from your business account. Drawing the funds in cash from your business bank account. Electronically transferring funds from your business to your personal account. Ultimately, it doesn't matter which method you use to transfer your LLC profits to yourself. It's simply a matter of convenience. The tax consequences are identical, and the transactions show up in your accounting records the same way too. To document an owner's draw, you will need to decrease your business's cash balance and retain earnings accounts by crediting the former and debiting the latter. Unlike a salary, owner's draws don't have to follow a schedule or stick to a fixed amount unless you set them up as a guaranteed payment in your operating agreement. As a result, you can adjust them to match your business's cash flow throughout the year. How are owner's draws taxed? Taking an owner's draw from an LLC is generally a non-taxable event. However, that doesn't mean you don't pay taxes on the amount. Instead, you incur your tax liability on those funds prior to the owner's draw, so the transfer is mostly irrelevant. Single-member LLCs taxable as sole proprietorships are pass-through entities in the eyes of the IRS. That means the IRS disregards them for tax purposes, and you won't pay any corporate tax for the company. As a result, your business income is taxable at the personal level whether or not you withdraw it. The tax liability for whatever money you generate automatically flows through to your personal tax return. Because you're not taking a salary, you can't pay your taxes through withholding from your payroll. Instead, you'll need to make estimated tax payments each quarter throughout the year. Here's an example to demonstrate how it works. Say you're the sole LLC member of an LLC taxable as a sole proprietorship. In 2021, you earn $100,000 in net income through your business. At this point, you already know you've generated $100,000 in taxable earnings and would owe income tax and self-employment tax on the entire amount. You then decide to take $75,000 in owner's draws and leave $25,000 in the business bank account to cover upcoming company expenses. However, that doesn't impact your tax liability for the year. You still pay taxes on the $100,000 of earnings. Do I need to pay payroll taxes? If you own a profitable single-member LLC, you're going to owe payroll taxes. However, the portion of your income subject to them varies depending on your business entity's tax treatment. Remember, payroll tax is a term that includes multiple subsidiary taxes. Generally, the most significant payroll taxes are the Federal Insurance Contributions Act, FICA taxes, 12.4% tax for Social Security and 2.9% tax for Medicare. If your single-member LLC is taxable as a sole proprietorship, you'll need to pay FICA tax on your business's net earnings each year. Whether you pay yourself via owner's draws or keep the money in your company, your FICA tax liability will be the same. However, it's more common to refer to these taxes as self-employment taxes in this situation since you're not actually running payroll. That said, these are the same taxes that businesses running payroll incur on any wages paid. For example, if you file an election to treat your single-member LLC as a corporation, you'll generally need to pay FICA taxes on your reasonable salary. Should you consider consulting a tax expert? The average independent contractor has a more complicated personal tax return than the typical employee. As a result, it's often worth engaging a certified public accountant and CPA as a small business owner, even if you're operating as a sole proprietor. IncFile is a company that offers a free tax consultation and filing service. Using IncFile, you can also set up your LLC, corporation, or nonprofit organization. Watch the rest of the video to know more about their tax consultation and LLC formation services. Now, let's talk about to form an LLC, and that is hiring a professional formation service. Professional formation services do all the steps you should be doing on your own, from filing necessary forms to acting as your registered agent. You usually have to allocate a specific budget for this option. As I already mentioned earlier, IncFile is one of the best companies out there to help you form your LLC. You can click on the link in the description to get access to this deal. IncFile is one of a kind as it offers a free package with services such as preparing and filing your articles of organization. Well, you still have to pay $237 for the state fees, which you would have to do anyway if you chose the DIY option. But looking at the bigger picture, all other companies will still charge their service fee on top of state filing fees. IncFile does not collect this fee. This plan already includes a free registered agent for your first year of subscription, and $119 annually moving forward if you decide to continue the service after the first year. IncFile's next packages are the Gold and Platinum packages, which both have package fees already on top of the $237 state fee. Each package has its own set of services which are all worthy of the subscription you are paying for. The Gold package offers you the benefits of filing reports and taxes for your LLC. Every year, USA LLCs are required to file a state annual report. This report is essentially an information update of your file so that the state knows who is now in charge and how to contact your company. USA LLCs are also required to file state tax returns. To make matters even more complicated, your annual report and business privilege tax share a document and are due at the same time each year. With the IncFile's Gold package, you won't have to scribble notes of these reports because IncFile will handle the whole process for you. Your Platinum package also has these services in the bag with the unique addition of expedited filing, getting a domain name, and a business email, which essentially increases your LLC's credibility. IncFile also has an exclusive partnership with Bank of America, so you can easily open an eligible checking account for your business. Yes, it is a must for your LLC to have a business account. Remember, an LLC has limited liability, for it is a separate entity from its members. You may forfeit your liability protections if you combine your personal and business money, and this is where the term, piercing the corporate veil, comes into play. Piercing the corporate veil is an LLC jargon that refers to the court's action to hold you as the owner or member of an LLC, personally liable for the LLC's debts or actions. Now, if you have been sued by some lawyer who sees a crack in your LLC, They might resort to piercing the corporate veil in which you are in any position defeated. This is why opening a separate bank account for your LLC is so important. Do you like the level of detail I'm providing you in my review so far? If yes, then make sure to let me know by liking my video and hitting that subscribe button for more high-quality business content.